With mortgage rates soaring past 7 and after today maybe near 8%, 7.5% about, as you can see there, home ownership has become even more difficult for many. But real estate startup Rome is trying to change that with assumable. Didn't Tyler Matheson just tell me about this
We were asking about this yesterday.
Assumable mortgages. That means when you buy the house, you get to take over the mortgage from the sellers as well. Now, their interest rate might be anywhere as low as 4, 3, maybe 2%. Now, you as the buyer still have to cover the rest of the purchase price, of course. But here to talk about it is Ronak Singh. He is the founder and CEO of Rome. Thank you for joining us.
Thank you so much for having me. It's a pleasure to be here.
So Tyler brought this up because this used to be much more common, as I understand it, but has gone by the wayside?
Yeah. So, right now we're focused on loans that are fully assumable. So those are government-backed loans. Now, Rome helps buyers wind back the clock on mortgage rates and purchase a home with that low-rate, fully assumable mortgage included. And the benefit is for buyers, they get to reduce their monthly mortgage payment by up to half compared to purchasing a home at today's prevailing rates.
Although, ironically, they would benefit the most if the mortgage that they're buying is very large, right? So,
yes.
Like, if someone only has $300K left on the mortgage and you need to take out a new mortgage for the other 300, it still helps, but,
Yeah, so right now we actually focus on the homes where you see the mortgage was originated, say, in 20 or 21. So the loan-to-value ratio is often, above 75%, which means that the down payment the buyer would need to make is very similar to that of a conventional mortgage, say 20% or 25%. But the value is that their monthly payment would be about half of what it would be at today's prevailing rates.
It's loan-to-value based on current value or the value of the property when the loan was originally taken out? Because houses have actually gone up quite considerably, sometimes 30% since then. So I may have an outstanding mortgage of $300,000 on a house that I paid $380,000 for, but now that house is worth $500,000.
Yep.
And so I've got to come up with $200,000 in cash.
Right.
Where do I do that?
So what would happen is we work with you as a buyer around what your preferences are. So if you're able to come up with the full amount in cash, we'll help you with that.
Not many people
can. If you need some support, we actually can refer you to a second lien lender. And these preferred providers will help you calculate the savings and ensure that your blended rate is still way below the market rate.
Okay, so I'm reading in a Wall Street Journal article that the FHA has processed 3,349 assumptions in the fiscal year that ends September 30th. There must be tens of millions of mortgages that would qualify for assumption. Why have only 3,400 of them been done?
Yeah. So this is actually a large part of the problem we set out to solve with Rome. We found that most consumers actually don't know this is a benefit that is given to them by law.
Really?
So, yes. In fact, I watched the segment yesterday. I think you had a guest on who had mentioned only certain kinds of FHA and VA loans might be eligible, or it might be an isolated incidence. And so this is a large part of what we're trying to correct the record on. It's actually all government-backed loans are fully eligible for the assumption. And this is an opportunity for most consumers.
So is it a question of people just not asking? Is your loan an FHA or VA-backed loan? The buyer not asking, or the real estate agent not asking, so that can be listed on the write-up of the property, so that
extraction,
so that I can immediately see that this has a 3% loan. Assumable.
I entirely agree. So there's two key issues, I think, that prevent there from being more attraction that we solve with our product. The first is it's been pretty difficult thus far to be able to discover these homes. Let's say you were shopping for a home in Atlanta. You would probably go to Zillow and use the keyword search function to try to find an assumable mortgage. And if you did, you'd find maybe 3 or 4 results. But if you hop on over to withrome.com...
Because it's not on there.
Exactly.
Nobody's thought to put that as a data point.
Because of the lack of awareness, people don't know they should be advertising the affordability benefit of their assumable mortgage. So when you're a seller or a listing agent and you hop on over to withrome.com, we help work with you. We understand your interest rate, your remaining mortgage balance. We help frame it in the right way to the buyer so they know that your home is the only one in the neighborhood they can afford because it comes with that 2% mortgage included.
And you get paid what to do this?
So we charge 1% of the sales price, and the way we represent this to the buyer is we say, look, our incentives are aligned with yours, right? If you save money, we help you make money. And so the way we think of this is, for them, the closing costs are going to be still much lower than a traditional mortgage. There's actually no appraisal required in an assumption because the loan has already been originated.